Good morning everyone and welcome to Morning Markets from True Potential. Today we'll look back at the US jobs report which Paul mentioned in Morning Markets on Friday, and we'll also look forward to the week ahead and some of the things that we as an investment team will be looking out for. So diving straight in then to the jobs report from Friday in the US, a good jobs report came out in terms of the number of jobs added, 850,000 jobs created. That's up from the 580,000 last month and well ahead as well of consensus expectations of around 750,000. It is worth saying these are volatile numbers. It's really about the trend that we see within them that gives us some sense of how the US employment situation continues to improve. So the overall unemployment rate remained at around 5.9%. What we did see, and it backed up the ADP report that we discussed last week, we did see quite a lot of job creation within leisure and hospitality, those areas of the economy that are continuing to open and were later to open given where they sat within the COVID-19 reopening plans. So that's certainly coming through in the US, but I think it's also worth keeping in context just the situation of where we've come from. Last year with around 22 million jobs lost in the US. Since then, we've seen about 15 million created, so we're still 9 million jobs short of where we were prior to COVID-19 impacting the economy. So that's something to continue to observe really over coming months, how that continues to change. One of the things that I think will help change that is the roll-off of some of the state level unemployment insurance benefits over the coming months. As they are removed, expectations would be that we would see a large number of those people move back into the employment market. So that's something certainly to see over the coming months. The other things just to touch on then from Friday, it's a relatively subdued session in equity markets and in sovereign bond markets as well. Because of the US holiday, US is closed today for the 4th of July, the Independence Day celebration. So that will certainly impact markets. We'll see weaker volumes, not just in the US because it's closed, but also what we'll see in Europe and the UK as well. Just then turning to the week ahead, what are the team looking out for? Key thing for us, I think, is the release of the Federal Reserve minutes from their meeting last month. That's important from our perspective because that was when the Fed indicated their plans to bring forward, in terms of the dot plot, their expectations of interest rate increases in the US. So we'll see some of the context of the discussion that went around that. Also we have the ECB minutes, but probably in real contrast to the US, we'll not hear anything in that, I don't think, about tapering of bond purchases or expectations of rate changes at all. So a bit of a contrast between US and Europe. Just looking at this morning then in terms of where markets are, relatively subdued performance in Asia. Some of that coming through from some increased regulation on technology businesses in China, but also the Caixin Services PMI in China, which came in a bit weaker than expected, 55 last month, just above 50 this month. Really services sentiment being impacted by localized outbreaks of COVID-19 within China, and that's just pulled back that services side of the economy in terms of the sentiment that we're seeing there for June. I'll leave it there for today. Please do join us tomorrow, and if you haven't subscribed, please do hit the subscribe button. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.